Everett Millman, metals specialist at Gainesville Coins. Just a moment ago, I told you I read a headline that said coronavirus could be the cause of a global recession. Now that sounds crazy and it makes people a little nervous, but at the same time, it hasn't stopped, right? We're starting to see other countries. We just heard a story about Lebanon. We know South Korea. We know Italy. So what's going on in the commodities market?
Well, the commodities have been responding to this disruption to supply chains globally that the coronavirus is causing. It is slowing down manufacturing in an environment where the global economy was already slowing outside of the U.S. before the outbreak even happened. On the other side, it obviously has a detrimental effect on market sentiment, that when people are fearful and investors are uncertain about the future, they really move to a risk-off kind of posture, and that's positive for gold, not so much for the other industrial commodities.
Right. So yes, gold is often viewed as the safe haven, and as a result, that's why we're seeing it at these 7-year highs. Good. Can gold go higher? I mean, when you look at models or the price per troy ounce, I mean, where is it headed?
It certainly can go higher. Coming into the year, I thought about $17.50 an ounce would be the high for 2020. That's obviously going to be revised higher now. And even if we have a pullback in the near term, because from a technical perspective, gold is slightly overbought right now. The RSI is pretty elevated, and we're, like you said, at 7-year highs. So you would expect to see some profit taking and some pullback if the situation on the ground with coronavirus improves. And as you said at the top, what we're seeing is that we still don't know how much worse this is going to get, how far it's going to spread, and what the ultimate outcome on the global economy is going to be.
The silver story is an interesting one as well. Tell us about silver.
Right. So up until now, silver has really been lagging gold. And that's partly because the industrial demand has not been there. It's been dragged lower. It really has been sensitive to the weakness in copper and the other base metals, industrial commodities. But today we see silver has really jumped. It has taken out its high from September of last year. And I think that's a general sign that the precious metals are moving into more of a bull market when silver follows gold higher and kind of breaks away from the other metals.
I mean, when I think of copper, we talk about manufacturing, right? Which metals are most tied to manufacturing? And when you have a global growth and a boom, which ones really grow the most and which ones are at risk now?
Certainly copper. I mean, there's some other ones related like nickel and lead, but copper is that bellwether for manufacturing and kind of the hard economy. And it is used in so many things. So it's not just in heavy industries, also in tech, in all sorts of electronics. When you're talking about future technologies like electric vehicles, some of them are going to require 4 times as much copper as your standard combustion engine vehicle. So copper is probably the greatest beneficiary of a boom in the economy, but we're seeing it go the other way right now. It really is responding to some of those risk-off fears.
Yeah, and when we talk about auto manufacturing or aluminum, I mean, what about that?
Well, they're very sensitive to the Chinese market right now because China has overtaken the U.S. as the #1 auto market in the world.
Steel.
Absolutely, right. So like you said, those heavy industries, we're seeing disruptions across that because the virus has basically shut down all of China's ports, and other countries are going to be worried about engaging in trade with them because they don't want to see this type of outbreak spread. So
when we talk about our own companies, I think of Freeport-McMoRan, I think of U.S. Steel, AK Steel. I mean, when we talk about all these U.S. companies that are metal-based, are they probably good investments for the long term? I mean, when you look at these groups, are they doing things right as companies?
Well, they're certainly at risk of being dragged lower by this current environment. I think that what you're seeing is that in the gold mining sector specifically, there's been some green shoots. There's been a lot of new exploration. You have companies like McEwen Mining and Silvercrest that have hit really big, new, rich veins of gold and silver. So that end of the mining sector has actually done much better than those base metal heavy industries that we're talking about.
What happened to, remember there was a time a couple of years ago that every commercial was buy gold coins.
Right.
I mean, first of all, they're all gone now. It almost felt sort of funny, like something was shady. But gold coins, gold bars, are those still good investments and to keep in your safe at home? I don't know.
They certainly are the best way to get exposure to physical gold. Now, ETFs are obviously more popular, they're more convenient, but they come with extra fees that really don't come up when you buy physical. I think it is a good investment going forward, and it is the best way to preserve the purchasing power of your wealth if you're interested in gold.
It's amazing, right? Great to see you, Everett Millman, metals specialist at Gainesville Coins. Thanks so much.